Assalamualaikum and a very good day to everyone. Today, our group will be presenting on two important accounting standards under the Malaysian Financial Reporting Standards Framework, which are Operating Segment MFRS 8 and Interim Financial Reporting MFRS 134. These standards are essential because they help users of financial statement understand how a company reports its different business activities and how timely financial information is provided throughout the year. Our presentation will be divided into two main parts, which are Part A MFRS 8 Operating Segment and Part B MFRS 134 Interim Financial Reporting. We hope this presentation will provide a clear and simple understanding of both standards. Without further delay, let's begin with Part A, Question 1. So, for the question 1, I will briefly explain about MFRS 8, which is Operating Segment. Operating segment is a standard that requires companies to report financial information about their different business segments. It uses the management approach, meaning segments are identified based on internal report reviewed by Chief Operating Decision Maker or CODM to assess performance and allocate resources. The main objective of MFRS 8 is to provide users with useful information about the nature and financial impact of a company's business activities, including factors that may influence future results and cash flow. MFRS 8 also applies to companies whose equity or debt securities are publicly traded or those preparing financial statements for submission to regulatory bodies. It also applies to consolidated financial statement of group with publicly traded instruments.
So what is the CODM? The Chief Operating Decision Maker. CODM is the individual or group responsible for allocating resources to various business segments and also assessing the performance of those segments. Under MFRS 8, operating segments, companies must disclose segment information based on how the CODM views and evaluates the business internally. The CODM usually consists CEO, Managing Director, or Executive Committee, EXCO. It actually confirmed with Telekom Malaysia that they said that the operating segments are reported in a manner consistent with the internal reporting provided to the Chief Operating Decision Maker CODM. For example, Telekom Malaysia Berhad, the CODM is actually the Group Chief Executive Officer, GCEO. TM's reporting structure indicates the CODM is the senior leader receiving segment reports. We also have Maybank, the Malayan Banking Berhad. Their CODM are the Group President and CEO. Maybank's segment reporting follows the internal reporting reviewed by the CEO and the Group Management Committee. Financial reporting practice engage in individual products or services or groups of related products that are subject to risk and return. Factors that need to be considered for a business segment are nature of products and services, the nature of production processes, and the nature of the regulatory environment. Under MFRS 8, segmental reporting includes two major types. Type 1, business segment reporting. This report performance and revenue business units or business clusters. Telekom Malaysia presents business segments such as business to consumer, B2C, business to business, B2B, carrier to carrier, C2C, and other shared services. So these are the report from 2023 and 2024. We can see that there is an increase in B2B, B2C. Under MFRS 8, a geographical segment refers to the disclosure requirement for an entity's revenue and current asset by geographical area, including the country of domicile and foreign countries. Some factors that need to be considered are the relationship between operations in different geographical areas and exchange control regulations. Next, type 2, geographical segment reporting. This reports performance based on the locations where customers or assets are located. So TM reports segment by geography in presenting information for geography segment segmented into Malaysia and also other countries.
For question 4, MFRS 8 requires company to disclose information that helps users evaluate the nature and financial effect of their business activities. Using Telekom Malaysia segmental report as an example, there are two key benefits of segment reporting. The first benefit is that segment reporting helps users assess the nature and financial effect of different business activities. From TM's segment report, we can see that business to consumer or B2C segment contributes the highest revenue, almost half of the company's total revenue. This allows users, especially investors, to identify which business unit is driving performance and which area may be growing or declining. Without segment reporting, this level of detail would not be clear from the total revenue alone. The second benefit is that segment reporting helps users understand the economic environment in which the company operates. From the geographical segment report, We can see that almost 90% of TM's revenue comes from Malaysia, while only a small portion comes from other countries. This shows that TM is highly dependent on the domestic market. As a result, users can evaluate TM's geographical risks, such as exposure to local economic condition, competition, and regulatory changes. These insights demonstrate how segment reporting provides clearer, more meaningful information for better decision.
Now, I will briefly explain about MFRS 134 Interim Financial Reporting. This standard provides guidance on how companies prepare and present financial statements for a period shorter than a full financial year, such as quarterly or half-year reports. The main purpose of MFRS 134 is to set the minimum content and principles for interim financial reports. It ensures that companies provide timely and reliable financial information, helping investors and creditors understand a company's performance, financial position, and cash flow. Although MFRS 134 doesn't specify who must prepare interim reports, publicly listed companies are encouraged to publish them at least every 6 months and within 60 days after the period ends. An interim report must include a condensed statement of financial position, a statement of profit or loss and other comprehensive income, a statement of changes in equity, a statement of cash flow, and explanatory notes. The same accounting policies used in annual reports must be applied. Companies also need to disclose any significant events or transactions that have occurred since the last annual report, such as impairments, acquisition, or changes in estimates. In conclusion, MFRS 134 ensures that financial information is timely, transparent, and consistent, allowing users to make better and quicker decisions throughout the year.
MFRS 134, entities are required to disclose significant events and transactions that have occurred since the end of the last annual reporting period, because these events may materially affect the financial position and performance of the business. Today, I will highlight two significant events and transactions that typically require disclosure in an interim financial report. First, we have major acquisition or disposals. For example, if the company acquires a new subsidiary or disposes of a major business segment, this will significantly impact asset, liability, revenue stream, and future cash flows. Such major structural changes must be reported because they directly influence users' understanding of the company's financial health during the interim period. Second, we have the second significant event is the issuance or redemption of debt or equity instrument. For example, if a company takes on a new borrowings or repays a major loan, this will impact liquidity, gearing ratios, and future finance costs. On the equity side, issuing new shares changes the company's capital structure and may lead to dilution of earnings per share, while redeeming shares reduces equity but may improve EPS. These events are crucial for investors and creditors because they provide insight into the entity's financial stability, funding strategy, and ability to meet obligation. In summary, both impairment of asset, acquiring of asset, and the issuance or redemption of debt or equity instrument are significant events that have to be recorded in the interim report.
Next, this table shows the interim reporting periods for both the current and comparative interim financial statements as presented in TM's half-yearly report. For the statement of comprehensive income, the interim period covers 1st January to 30th June 2025 and the comparative period is 1st January to 30th June 2024. For the statement of financial position, it is prepared as at 30th June 2025 compared to 31st December 2024 from the previous financial year. Lastly, for the statement of cash flows and changes in equity, both are reported for 1st January to 30th June 2025 with comparison to 1st January to 30th June 2024.